Okay. One more fantastic question I received is about currency risk. Currency risk is a very profound concept. There is a lot to talk about. So the particular question was asking about the differences between translation, transaction, and economic risk. So let me start in that way, okay? So there are a lot of corporations that do business across borders, okay? Not only import and export, that I think is more or less kind of an easy thing to understand, but rather that they have presence across borders, so meaning that they have subsidiaries across borders. Okay, so if you think about one corporation, so I spent 5 years in Eugene, Oregon, maybe 6, and one of the big corporations, multinational corporations that has a lot of presence in Oregon in the United States is Nike. Okay, they have subsidiaries all over the world, and some of these subsidiaries are merely kind of selling items. Some of them are producing items and then shipping them worldwide, and so from the point of view of Nike, when we look at its financial statements, right? When Nike makes a report to its shareholders, to its investors, right? It needs to say how much assets Nike has, and some of those assets might be in Japan, and some of those assets, physical assets like buildings, right? So machines, they might be in Singapore or they might be in Europe. Okay, and so how does Nike tell shareholders the value of those assets as of January or January 31st, so let's say December 31st, depending on when the fiscal year end of Nike is, in United States dollars, because that's the currency in which Nike reports to shareholders. Okay, so that's essentially translation risk. So the assets are in, say, Japan, and Nike needs to tell shareholders what's the value of these assets in United States dollars. Once again, the assets are in Japan, right? So the value of these assets, like real estate or whatever machinery they have there, might be kind of naturally is denominated in Japanese yen. Now, the Nike needs to report to shareholders in US dollars, right? So without moving any actual assets, Nike needs to convert these assets in Japan into United States dollars for reporting to tell shareholders what's the value. Okay, so that is translation risk. From year to year, the exchange rate between US dollars and Japanese yen changes, and that changes what is the value of these assets, even if the value in Japanese yen didn't change. So that's the translation risk. In a way, you can think about translation risk as a measure of exposure of Nike to that currency fluctuations, to this kind of to the extent that Nike is actually kind of a multinational corporation. If its corporation is domestic, it doesn't produce anything outside, it doesn't have any other assets anywhere in any other currency area, then there's going to be no translation risk. Okay, so that's indeed kind of a privilege and a curse of multinational corporations, being able to have presence in different currency areas. Okay, next step, transactions. Okay, so in the Economics Olympiad of previous years, so 2025 was a fantastic question about what happens if you deliver a service or deliver a good, but you get the payment for that delivery you sign a contract today, but the payment for that delivery happens in a particular number of months. Okay, so say even couple days, couple months, maybe a year. Okay, so what it creates is this transaction risk. Transaction risk means that already we have a contract. Okay, so contract is in place, or maybe it's signed, and then there is uncertainty at what price, at what spot exchange rate this will be converted in the future. And that can be diversified away with certain derivative contracts, which essentially serve as an insurance. So you transfer the risk to another counterparty. So this transaction risk is really that risk of at what rate, so we already have a business relationship with another counterparty, at what rate will that transaction settle for me as a counterparty, okay? So think about it as like there are fluctuations in the exchange rates, right? So they go up and down, up and down. There's uncertainty in which direction they will go. That's where you are writing this transaction risk risk waves. Okay, so at what rate will the when the contract has the settlement, at what rate we will be able to convert the money out? Economic risk is much more profound. Okay, so in financial economics, there are a couple of different parities that are kind of empirically have been and theoretically have been hypothesized and empirically supported, that seem to guide long-term changes in exchange rate, not short-term, not this ups and downs, right? But like the long-term trends in exchange rates. One of them is, for example, covered interest parity. So the easiest thing I think to understand is the uncovered version, the one with the risk. So the idea is that if you have more inflation risk in one country, right, then scratch that, uncovered interest parity. So the exchange rate appreciation and depreciation is driven by the difference in the interest rates between those two countries. And the idea is that if it's not set to optimize that, to neutralize the difference in the interest rates, then there is arbitrage opportunity, and investors can borrow in the low interest rate environment and invest in high interest rate environment. That carry trade that we talked about again in my previous videos, there was a question about that in the Economics Olympiad. Okay, so interest rate differential essentially dictates appreciation or depreciation on the long run horizons, like multiple years. Okay, in between the currencies. Otherwise, there is again opportunity for arbitrage. Okay, so what does it mean for economic risk? So think about it like that. What drives interest rate environments in different economies, right? There's monetary policy, there's fiscal policy that potentially influences supply and demand of money, and then through economic growth and all these factors that factor into what the equilibrium interest rates in those countries are. Okay, now economic risk in exchange rates is anything that distorts or changes one of these paths. Okay, so when things are the way they were supposed to, expected, everybody expects a certain appreciation of the currency, interest rates are stable, okay, fine, everything is in kind of an equilibrium. So what happens if there's something happening within one country that dramatically shifts, say, interest rate environment in that country, makes it, let's say, less interesting for the international investors to give money to, and then that translates into the changes in the exchange rates, and that, importantly, that's where the economic risk is. Okay, that distorts the business relations, the contracts, economic forces that guide the trade and the investor flows between countries. Okay, so let me take the example of Nike. Nike was for a long time, especially 90s, okay, so 90s, they were borrowing heavily in Japanese yen and then investing in US economy, in US subsidiary. So one subsidiary was borrowing the money in Japanese yen and then investing in the subsidiary. So because Japanese yen environment, the interest rate was so low and so favorable. Okay, so with changes in time, so if there are other forces, for example, there was say, scroll forward to 2019, 2020, interest rate environments in the United States are much lower, and at that point in time, so the exchange rates, wherever they're moving, the most important point is that the interest rate differential is no longer guiding the borrowing in Japan, investing in the United States. The US exchange interest rate is so low that it's potentially no longer interesting to do business that way. So wherever economic forces move advantage of either borrowing or investing in that country, trade flows, that's where, and again, exchange rate is what translates kind of prices or attractiveness of investment opportunities across borders, right? So whenever the investment opportunities change and no longer kind of the forces shift, that's economic risk of exchange rates. It's manifesting in exchange rates, right? Because exchange rate does not if exchange rate compensated that differential, then no investment still would have been profitable. But when the investment forces change, when trade flows change, that's the economic risk realizing. Okay, and so doing investment cross borders is exposing our agents to that shifting economic forces that manifest through changes, long-term changes in exchange rates. This could be economic forces, it could be political forces. I was in Austria when Swiss central bank dropped the Swiss franc. I think appreciated overnight by like 30% or something, which is again dramatic change. It shifted a lot of decisions and kind of the realizing a lot of negative events, negative realization of that economic risk. So a lot of the, for example, I knew some people who borrowed in Swiss francs mortgages, had mortgages from Swiss bank in Swiss francs, and they had to default on them because they couldn't no longer afford the payments, right? So that's, to me, that's not transaction risk. That's not like, okay, for this transaction I will have like 5%, 10%. This is meaningful change in the economic conditions that then results in like people no longer willing to take mortgages from Swiss banks losing business, and so on and so forth. So once again, whenever it's not about kind of the marginal kind of what's the difference between transaction and economic risk, right? It's not about with this particular transaction how much money we're going to settle. It's rather, do we want to do business or not at all? So that's, I think, for me, the most clear distinction between transaction risk and economic risk of exchange rates. Okay. But I think a more useful way to think about exchange rate risk is that any risks related to dealing with transactions that are cross borders. In a sense that not like in the European Union, of course, this is one currency zone, so cross currency zones. That's what I mean by cross borders, cross currency borders. Yeah. So fantastic questions. If you have any other questions, I would love to hear them. Thanks for engaging with my channel, and I'm hoping to make it more useful for you. So please let me know if there is anything else I can clarify.